Good morning, good afternoon, good evening, and welcome to the third day of the Fidelity Financial Inclusion webinar series in conjunction with the Financial Inclusion Forum Africa and Financial Inclusion Africa. This year, we are really privileged to be part of the Financial Inclusion Week 2021, which has been great so far, and I hope you've been enjoying the insights and the discussions that has been going on over the past few days. We have two other events that would all be on demand, so you should go onto that site and look at the other videos that are there. My name is William Durban, and I'm the chair of the Financial Inclusion Forum Africa. The forum is a network of people or professionals who are passionate about promoting financial inclusion across Africa. So please join us, follow us on social media, and let us join the fight to beat financial exclusion on the continent. Today, we'll be talking about e-currencies, a solution to promote financial services in uncertain times. And I wouldn't talk too much about it because we have a distinguished panel to talk about it. And I would like to introduce our moderator, Clara Arthur, who is a DFS expert, but also a director at the Financial Inclusion Forum Africa. Clara, over to you. Thank you.
Thank you very much, William. Good morning, good afternoon, good evening to everybody, and welcome to day 3 of the Financial Inclusion Week. It's a pleasure to be the moderator, and I do have an esteemed panel joining me. So let's go straight to the matters of the day. And I think I have two people who joined me this morning to delve into this new development or change. I think everything seems to be changing now. So to speak about e-currencies, whether e-currencies are definitely going to help us promote financial inclusion, join me to welcome Mr. Kwame Opong. Kwame is the head of FinTech and Innovation at the Bank of Ghana. And we all know that's the department spearheading together with the governor and his team to roll out Ghana's pilot of e-currencies. Kwame, please, a few words to...
Thank you very much. Good morning, good afternoon, good evening, wherever you are. It's a pleasure to be here, and I look forward to this discussion.
Thank you very much, Kwame. My next guest, you know we can't talk about Ghana, we have to talk about our big brother. So joining me today is Mr. Oladipo Alabedi, who is Group Head of Digital Banking for Sterling Bank, Nigeria. Oladipo, please, a few words about yourself. Thank you.
Thank you very much. Good morning, good afternoon, good evening, everyone, wherever you are. I'm super excited to be here and look forward to the discussions. Thank you.
Thank you very much. So I think this is very timely and for us to talk about e-currencies. For me, I am just delighted because I know the work we've done as two countries in terms of what we want to do and the direction we're going with the whole issue of our currencies. So I think the Bank of Ghana was the first to launch a pilot, and this was done in August. And then we had Nigeria follow. But I think for us to start, let's just set the whole thing in context and then to get everybody to understand what are e-currencies. I mean, we've had all the discussions around crypto, but for us, it's important that we delve into this matter and actually put to rest some of the concerns. What are the risks? What are some of the challenges? And I'll ask everybody if you have some questions to start submitting your questions because I want this to be very interactive. Today, we're going to go into exactly what e-currencies are. E-currencies, are they definitely going to help us look at the question of financial inclusion? Are they going to help the unbanked, the underserved communities? What are some of the challenges that are going to emerge once we bring on board e-currencies? We're also going to look at how e-currencies can contribute to a resilient digital ecosystem. We've all been very sad or in terms of looking at how the pandemic has affected everybody's life, where it's definitely thrown a spanner in everybody's work. So are we looking at building technologies and innovation that can actually stand the test of time? Are we looking at how resilient e-currencies would be for the digital ecosystem? We would also look at what are some of the different ways in which other countries have implemented e-currencies. Are there any learnings and insights we can actually glean from to make our implementations better? I think this is just a summation of what I am going to speak about. And then to start off, Kwame, I think I'll set this discussion in perspective and let's start from Ghana. Can you just briefly tell us why and what are e-currencies in brief terms? Thank you very much.
Okay. Thank you very much, Clara. So e-currencies are generally digital currencies, but I would like to distinguish them. So you may have heard cryptocurrencies, for instance, being referred to as e-currencies or any other form of digital currency. But I think it's important that we consider a few things. First, the kind of currencies that the central banks are issuing is going to be fiat. That's the intention. So this is central bank digital currencies. So they are similar to the notes that are printed and the coins that are minted and made available to each jurisdiction, and typically is issued by the statutory organization or authority within a certain country. And in our case, the Central Bank of Ghana. In the case of Nigeria, the Central Bank of Nigeria. Now, there's a big distinction between that and the some digital currencies out there, such as cryptocurrencies. And these are typically virtual assets. And I think if you look at the breadth of cryptocurrencies and tokens out there, they are typically meant for different things. So if you look at the blockchain technology, for instance, it needs some kind of a token to be able to function, to put it in simple terms. And so they have different uses for it. You have assets-based tokens, you have utility tokens, you have attestation tokens, etc. That is very different, right? The currencies, because currency is actually a very specific legal designation. So these central bank digital currencies are a digitized or a dematerialized version of your local currency. So in the case of Ghana, Cedi; in the case of Nigeria, the Naira. Also, one important description to help ground this for the audience is whenever you're thinking of central bank digital currencies, such as the E-Naira, the E-Cedi, the E-Corona, or any of them, think of it as the cash today. Not as a payment service, but as cash. So however you think of your coins and notes and its usage, you can think of a central bank digital currency in that same manner. It is not a payment service by itself. It is the currency that is printed and made available in the economy, as is the case today. So hopefully that sets the tone for the discussion. Thank you.
Very well said. Thank you very much, Kwame. Before I bring Oladipo on board, so let me just share something that I picked up when I was doing some research for us. So CGAP had a blog issued on the 13th of May, where Greta, with our colleagues, as you know, Kwame, we're looking at whether is financial inclusion a reason to push central bank digital currency. And they open it with a very interesting story I'd like to share with everybody this morning, for those of you who haven't read it. So there was once a man digging by the roadside with a shovel. Soon, a merchant in a wagon passes by and offering to sell the man a red shovel. A red shovel digs better, it digs better ditches. The man attempted to sell this red shovel to the man who was digging with a shovel. I think in all his exasperation, because the man didn't understand why the merchant was bent on selling him a red shovel when he actually had a shovel. So the merchant continued to list all the virtues of a red shovel. And when the man continued to use his original shovel, he drove away. Soon the merchant threw up his arms in exasperation and said, "That is it, I'm not going to attempt to sell you a red shovel." I am saying this because, do we really need e-currencies now? Oladipo, can you share a few words what e-currencies are from the context of Nigeria?
Okay, thank you very much, Clara. Yes, like Kwame mentioned earlier, the e-currencies are just a dematerialized version of the physical cash that we carry today. And it's a digital version of it, basically. And for financial inclusion, one of the things that the e-currency will bring is a more efficient payment method, and also to reduce the cost of transaction. Today, if you are, and because the e-currency is a dematerialized version, it's going to work and mimic the same way cash will work today. Today, if I want to pay someone through the current banking system, I would have to go to my mobile app or my internet banking platform and do a transfer. And when I do that transfer, there is a cost to that transaction. But if I'd given the person cash, there's no cost to that transaction. And so that's what the digital currency, the e-currency, is going to bring into the fold. Because what happens now is that everything is running under a central system and a central wallet system, and it means that it's going to be typically seen as a wallet-to-wallet transfer. Why is this important? It's important because the man on the street wants to receive 10 naira for 10 naira, does not want to receive less, and the person paying as well wants to pay 10 naira for 10 naira, does not want to pay more. And this has been one of the key reasons why a lot of people still prefer to hold on to their cash. We've seen that a lot here in Nigeria, where everything is predominantly cash based. The central bank has been pushing a lot of cashless policies over the couple of years, but we still have not been able to grow to the extent that we want to. And I believe that this solution, this e-currency, will be something that will help to improve financial inclusion, because then we can reach more people. If I just throw some numbers out there, in Nigeria, we have an adult population of close to about 100 million people, and almost everybody has a mobile phone, which is also like 100 million. But the number of people that are banked are about 41 million people. So that means that's like 41% of the total adult population that could have been banked that are not banked. So a digital currency like the E-Naira, for instance, means that if I have a smartphone or a feature phone, I could easily open up a wallet, and then I'm already putting my cash in that digital wallet, and then I can start receiving money from there. Thank you.
Thank you very much, Oladipo. So I think you set the tone for us to move to the next discussion. But I have something I would like Kwame to come in. Kwame, is that really the case? I mean, you hear what Nigeria is doing in terms of as easy as just moving the money into your wallet. But looking at the fact that we need to ensure that the underserved and the remotest of all communities in Ghana are served, I am thinking, will e-currency really deliver that element of financial inclusion we are all hoping would do?
Okay.
Please.
So this is a very important point to make, that every country is going to have to make a certain decision about how they implement their central bank digital currency. So Nigeria and Ghana clearly are going the value-based approach, and to distinguish the types of e-currency, we have wholesale and retail. Wholesale is being used, so CBDC. Wholesale is used at the RTGS level for interbank settlement. Now, at the retail level, you have the account-based, you have the value-based. The account-based, the central bank holds the funds and the notes, and service providers, such as banks and payment service providers, can provide you a means to access and spend that money through USSD services, internet banking, and payment apps. So that's one approach. But both of us are looking at the value notes, where the notes actually sit in the banking system. They are printed and they are issued just like we do with physical cash today, and that is used to operate. Now, the reason why I highlight that distinction is that every country is going to have to make a decision as to how they implement CBDC in their jurisdiction based on their needs. One of the priorities being financial inclusion. So if you look at financial inclusion today, and if you look at the challenges that hold back financial inclusion, let's be realistic. There is a price to financial inclusion, and that price comes in the form of connectivity, that's data connectivity of some sort, or power. You cannot easily get included in a place without power and without some form of GSM connectivity. That's a real problem. Here we have CBDC that is capable of being used in offline environments as well, except it's not being used as cash is being used, where you can't trace anything. At some point, there's a certain level of digital footprint, which is one of the key prerequisites to improving financial inclusion, right? Or key enablers of financial inclusion. So that's the first thing, more broadly. Now, when you also look at the fact that for all the financial inclusion efforts, if you look at the success of mobile money in countries like Ghana, for its success, there are still some challenges. Those challenges are more operational. When you look at the frontier and the challenges that service providers, banks, payment service providers, microfinance, everyone is encouraging in the rural and rural and frontier type regions, you notice that operationally, cash being the main lubricant within the economy presents a certain inefficiency that is not supporting and enabling inclusion as we would hope for. So is there a way that as a central bank that provides us cash, you can begin to explore an alternative to the physical notes that today become the lifeblood of moving funds around and creating inclusion? That is something that you have to consider, and CBDC presents that opportunity so that things that have become a problem, such as liquidity management, and mobile money service providers will tell you, the banks will tell you, because the mobile money services rely on the banking infrastructure, they will all tell you the challenges associated with it. So Dipo made a point about the efficiencies that it introduces in terms of cost and the efficiencies it introduces in terms of settlement and in terms of effective settlements in the payment system. And so it's an operational enhancement that will enable the most potent drivers of financial inclusion today. And that's one of the primary reasons why this is important. There are other reasons and other additional benefits, such as improving competition, improving innovation, that would ultimately help with financial inclusion. But the primary motivations are, from an inclusion perspective: one, access in offline environments and usage; two, improvement or introduction of efficiency into the existing service channels that are helping us drive financial inclusion. So I think we have to look at it from that perspective.
Very well noted. I think you are convincing some of the skeptics that we already have around about whether financial inclusion will definitely improve with e-currencies. So Oladipo, let me come to you. Kwame presents it very well. I see all the efficiencies we're going to build, innovation. I think for me, as a practitioner in the ecosystem, I do see the good points about extending and getting everybody on board. In fact, I was reading some research last week, and I realized in Ghana, the mobile money wallets we have are even more than the population of Ghana. So just shows that quite a number of people are eager and they know how to use the wallet. But in all of these things we keep talking about, Oladipo, what are some of the risks we can start looking at? I'm sure everything is not just going to be as simple as we make it sound. We are in Africa. We know what the challenges are. We've looked at some of the market infrastructure issues that we have. Bearing all of that, assuming we have a perfect network, we have perfect connectivity, everything works. I still think we do have some risks and challenges. So perhaps highlight a few risks, looking at your context from Nigeria, and then I'll come to Kwame so we can highlight a few risks and see how we can marry both countries and how we can address these. Oladipo, please go ahead.
Thank you, Clara. In terms of risk, in my view, the first risk that stares us in the face is the cybersecurity risk, because this is a digital currency. So it means that it is very, very open to cyber attacks from hackers and fraudsters and all that. So that is a big risk. Even the cryptocurrencies and some of these big companies that are managing cryptocurrencies, some of them have been attacked recently, and monies of customers have been moved out. So that for me is a key risk that we need to this CBDC brings. The other risk is around the operational side of things, which you have clearly alluded to, around do we have the right infrastructure to support this type of technology, given that we are in Africa and there are still certain places, even in Nigeria, where there is no electricity, and then maybe it's just the GSM networks that are working or available in those places. So that again is that's an operational risk that would also impact on the adoption of the CBDC or the E-Naira. The other side of it that I also look at is also on the data privacy side of things, because this is now a centralized system where the CBN has a 100% view of visibility into what you're doing. Do I feel safe doing those type of transactions? If I give Kwame 100,000 naira, nobody knows I've given him 100,000 naira. But if now this leaves a digital footprint of the transactions that I've done, so will that also be something that will get people to use it. I think that's also some of the risk and challenges that we'll look at. Finally, for me, would be adoption. And in terms of adoption as well, because this is a digital asset, you can make a mistake and send money to somebody that you shouldn't have sent it to, and it's gone. We've seen that happen a lot of times with cryptocurrencies, and getting that money back is always a problem. But because it's a central bank led system, you may be able to get the money back, but the transactions would have gone in settlement because of how efficient it is. So I think those are some of the risk and challenges that off the top of my head, that I could think of around the implementation of the CBDC. Thank you.
Thank you, Oladipo. Kwame, do you want to add a few lines before we move to some questions that I can see in the?
Okay. Yes. So I think Oladipo has mentioned one of the primary risks of CBDC, and certainly central banks are not unfamiliar with mission critical IT infrastructure and technology infrastructure, and are very mindful of it. They're mindful of their roles and the criticality in securing the data and systems that they operate. And to that end, I think most central banks have prioritized this in their evaluation of their technology solution choices. The second thing I think also Oladipo mentioned that I should highlight is the issue of transparency and visibility and privacy. It's always a delicate balance. So on one hand, I think generally each central bank's goal is to strike a balance between giving honest users the privacy they require and deserve as citizens of a free and independent country, to be able to transact without being exposed or someone tracking them. People just like to have that comfort, and it's not necessarily because they're up to no good. I mean, people want to donate in private. People want to be engaged in benevolent activities with some level of discretion. That should all be supported. But at the same time, there should be a threshold beyond which, for AML and CFT purposes, we need to have the ability to be able to track and see what's happening. So I think every central bank has had to make that decision and determine what the appropriate balance is in view of their country's circumstance. Again, similarly, we have made our decisions around it. Some other additional concerns and considerations have always been looked at. One, the most important element is how will consumers adopt this? What is the user experience? And we often overlook that, and that's one of the ways where an amazing solution potentially can be introduced into the market and fizzle out and die. How do we make sure it is easy, intuitive, and integrates into the current ecosystem and structure so that consumers can easily adopt it and they have confidence around it? Trust is the underpinning element of any bank or financial institution, and that's not unfamiliar or dissimilar to the case of a central bank. And so how do you also ensure that consumers have trust and confidence in the central bank digital currency that you issue, so that they can adequately use it? So the necessary protections from fraud, consumer understanding as to how it's used, and the consumer protections around its usage at the service delivery layer, all those need to be ensured. And also there are some key considerations from the central bank operation standpoint. What is the implication on monetary policy? What is the implication in terms of potentially disintermediating banks when it comes to deposits? These are some of the other considerations, and of course AML, CFT, I think we've talked about a bit. But those are all considerations that are looked at, and I can confidently say most central banks have assured themselves they have a clear response and plan around that before they make a decision to proceed. Let me acknowledge my personal excitement when I saw that Nigeria is going forward with the E-Naira, and not with the pilot only, but actually going forward with it. I think their market and their circumstance, that judgment was made. When you look at the lessons that are being learned, it's a benefit for all of us on the continent, and it will give others the confidence to follow in the path. So I think this is a journey we're all going to learn from, and we'll continue to improve and ensure that it's well structured in a way that can help us achieve our ultimate objectives.
Thank you very much, Kwame. I think I fully agree with you. I mean, we've seen the journey we've come through even as a country in terms of even adoption of mobile money. I mean, today we can talk about all the volumes and the numbers we're seeing, but getting people to change their habits, we all know change is a difficult one. It's important in life, but I think the fight against cash, adapting to the new payment methods, it's taken us quite a while. But it gives me great joy that where we are now, introducing the e-currency, perhaps people are more user-friendly. They probably would adapt to new technologies. I think now people are more eager and excited when they see new payment methods coming on board. And I think with the work we've done in the ecosystem from perhaps the last 10 years, 15 years, and even looking at the enabling environment that we have, I think Ghana and Nigeria now, because we are quite similar in terms of how we manage the payments ecosystem, I think we'll definitely see some progress, and perhaps people would be eager to try the e-currency now. But let me come to you, Oladipo, because I have a question, and I think let me go and listen to some questions from the audience. Somebody was asking me what the difference between the normal mobile money wallet and the e-currency wallet will be. I think, Oladipo, if you can answer this for me, I'll come back to Kwame with the next question.
I think the key difference is that the mobile money wallet is sitting on the mobile money operators platform, and for the CBDC, that is sitting on the central bank's platform and is backed by the fiat currency of the country. The mobile money is still your Naira or your Cedi converted into credited into your mobile money wallet, and then the E-Naira is now your cash, physical cash, that is now in the digital. It's pretty much they look like the same thing to me, and I feel that that's it's just the use cases and who owns what that makes it different. Comment? Do you want to add to
Yes.
that?
Yes, and I think two foundational things that Oladipo has mentioned. One, it is cash. Today, if you look at mobile money is electronic money issued on the back of cash. Similarly, a CBDC is cash. Secondly, and I think it's important to highlight this because it's digital as well and it can sit in a wallet, it can often be misconstrued as either a competition to mobile money, competition to digital banking solutions from banks, etc. The role that cash plays today, because CBDC is not like cash or is not like currency or is not backed by currency, it is that same currency. So if you have your Naira coin or your Cedi coin, the pesos, Cedis and pesos, you have your Cedi notes. Similarly, you have a digital version of these notes. So these notes are minted. They are made available to the banking system. So the commercial banks take it from the central bank and the distributors as they do with cash and coins today. So when you're thinking of central bank digital currencies, think of it from that perspective. Once you do, all of it becomes clear. CBDC by themselves are like cash, and therefore they are not payment services. Someone has to provide a service on it. It could be government, it could be private sector. But either way, think of it from that perspective. So once you look at the model from that perspective, it begins to become clear what CBDC is actually coming to do. So when all the points that we've made about how it introduces efficiency, how it drives inclusion, that would begin to make sense in the sense that it comes to enable, not to compete. And so I think to the point being made out there, this is exactly the big distinction between the two, between CBDC and the rest. So I would again continue to encourage the audience. I know beyond this, they will still have some questions. Feel free to be sending your emails to us and asking some of these questions, but also look online. There's a lot of material around CBDCs and how they've been deployed. It's always a challenge because CBDC is also technology, and you can do a lot with it. And there are concerns about people. Our country is going to put interest on it. Our country is going to provide direct services through it, etc. I think all those are choices that are made possible because it's also programmable money. So I just wanted to add that to the submission that Wadip had made.
Yeah. Yes, and just
Thank
to
you.
add a
Go ahead, Oladipo.
just add a final piece to what Kwame has said. I think that the key there's no distinction basically. It's just that it's still your same cash that has been credited into a mobile money wallet, and it's because you need that wallet to be able to transact. That's why you have the mobile money wallet, and this is digital payments, and it's the same thing that the CBDC has done. So it's still your same cash, but it has to be credited into like an E-Naira or E-Cedi wallet so that you can perform transactions with it. So that's basically what it is. Thank you.
Oh, thank you, Oladipo. Okay, at this point, I have a question I need to ask you on cross-border trade. I'm sure we're all aware that merchants sit in Ghana. They actually want to find an easier way to buy goods in Nigeria. There are people in Nigeria who want to pay for services in Ghana. Are we beginning to see the solution to this whole issue about having a currency that would, all the issues we have around settlement in terms of cross-border trade, do we see as more and more countries in the sub-region deploy their e-currencies, that this whole elephant we've all had in the room about how to handle settlement across the sub-region? Kwame, what's your view on e-currencies and interoperability with other e-currencies to enable cross-border trade across Africa?
So this is a very important area that I think every central bank that has looked at CBDCs has explored as well. But one of the risks over here is that, look, let's be fair. Regional integration, particularly economic integration, is very important, especially to us as Africans. Trading amongst ourselves gives us the resilience we need. It gives us the further integration we need. And if you really look at us, we should be trading amongst ourselves a lot more than we are today. So that's something that's been an aspiration of all Africans since the beginning of our independence. The challenge is several things have been the constraint. And the existing structure, one of the challenges that have introduced a problem or barriers into being able to further advance that goal has been the legacy systems and the complications that it comes with. So there are efforts going on as we speak, and I'm sure you've seen announcements about it. Those efforts will proceed. Those efforts will be successful. But similar to how CBDC can come to enable the broader service delivery efforts in country, it's also quite likely that CBDCs, when adopted in all these countries, would introduce a certain measure of efficiency that would further enable cross-border. The question is, what is the framework that you adopt in order to implement this? Because if Ghana and Nigeria, having been the first on the continent, for instance, to go forth with this, decide, let's define a system that works for us. What happens if Mali comes next? South Africa goes third, fourth, and this country, what happens? Do they adopt this framework? Do they adopt another framework? These are some of the concerns we have to be mindful of. So you don't have a mixed patches of bilateral solutions. I think one of the key things about interoperability is bilaterals are not scalable long term.
Yeah.
And so you always have to try and have a multilateral approach. And one of the key ways of doing that is to work with a global community. So BIS is working on some efforts. They're partnered with the Monetary Authority of Singapore. There are other central banks involved. I believe South Africa is involved. Similarly, we don't have to be necessarily plugged into it from an integration and technology standpoint to be able to understand that we can vicariously learn from that process. We can make inputs into that process in defining a global standard. And when there's a consensus around the globe about how we have cross-border settlements for central bank digital currencies, it's a benefit for everyone. It's available to everyone. We can all adopt those standards, and that's it. And so that's how we are looking at it, and we'll continue to lend our efforts and support and learn from what's happening and use that to inform our internal pilot projects as well and our research on this particular topic. So long term, we see this happening, frankly, maybe medium term, seeing how fast they are moving on that project. But the most important thing is it's more of a global concerted effort than internal bilateral, unless maybe there's some sentiment that or some perception that the global efforts is somewhat likely to fail. But as it stands, it looks quite promising, and I think we all need to lend some support to it.
Thank you, Kwame. Oladipo, do you want to add anything on the cross-border discussion in e-currency?
Yes,
then I have a question for you.
Yes, it's actually a very interesting conversation. The cross-border discussion is something that the central bank in Nigeria is looking at. And I believe that, like Kwame said, it's going to be, it's just a matter of time before it happens. And I also strongly believe that there will be exchanges at some point where these exchanges will be set up to help you convert your E-Naira to E-Cedi so that you can make the payment finally in CDs to your counterparty over there. Now, why that is going to be a thing is because today, if I want to buy something from someone in Ghana, I have to first probably convert my Naira to dollar, then convert the dollar back to CD, and then make that payment. And then there's the cross-border, there's the banks that are involved in that transaction. With the CBDC, it means that the finality of settlement is almost as instant as a push of a button from my mobile phone once I can get the exchanges right. I think that the framework for how this will be done from a central point of view needs to be put together so that it can accommodate other markets like South Africa if they decide to start their own CBDC, or Senegal or any of the other African countries, Rwanda. There should be a process where I can easily just convert my E-Naira to their currency at that point and then make the payment. But I believe that is what is going to happen very soon. P2P payments will start, but then it will now be formalized by the CBN. Thank you.
Okay. Thank you very much. I think I have some more questions coming through. And Kwame, I have an interesting question for you here. I think you go first. What prevents the central bank to compete with payment providers or banks?
Okay, that's a question. That's a fair question.
A very fair
we
one,
issue
Kwame.
currency. We issue currency, and a central bank digital currency is legal tender. A central bank currency is a liability on the central bank. That's what we issue. We are not a payment service provider. And this is one of the temptations that you have to carefully determine how you accept or you pursue. In the sense that if you're in a market that already has certain issues addressed by the market and by the private sector, there is no need to intervene. Typically, when you see a central bank intervening in the market, it's only because there's a market gap that the market is unlikely to solve. So if a central bank is not identifying a gap in the market that is unlikely to be resolved by the market, it is not going to get involved in that. And so if you look at, even with Bank of Ghana and in our history, the setting up of GIPS was intended to address a certain gap in interbank settlement, to bring a certain level of efficiency. If you look at our intervention in mobile money interoperability, it was to ensure a certain measure of efficiency and frictionlessness in payment. And if you even look at the enhancements to interoperability today, which is now ensured in Ghana that when you're sending across network, you cannot be charged more than what at the time the average pricing was for sending money on network, that is an intervention for the greater good. So I think it's important that we all remember that no central bank is interested in either trying to compete with banks, payment service providers, or any other entities that it supervises. Central banks only intervene when they need to in different forms and capacity to address market challenges. So yes, we're not going to be, at least we haven't determined that we're going to get involved in payment services, and that's not the case in Ghana. If a central bank in a country that just, is beginning to make some inroads into the payment space and, for instance, determines that, hey, looking at the pace of scaling and scalability, they're not going to be able to get enough service providers to scale to some important parts of the country or some rural areas, or the viability in certain rural areas is not quite there. And it's not going to be addressed in the next 3 to 5 years. If they determine to, for instance, subsidize and invest in providing some support to enable usage of digital currencies there, that is intervening to solve a problem. And what you see happening over the long term is they typically look at relinquishing that to the private sector or trying to get banks involved to take ownership of that and run with it. But they always have a plan around that, and they are clear on their mandate. Central banks are clear on their mandate. They do not come to disrupt the ecosystem. They look for ways to enhance it. And you'd find that often when they go out there and provide the necessary support, it actually enables everyone else. And they either transition or they do something with it. So I think there are all these concerns about CBDC going to compete mobile money. No, CBDC actually makes mobile money better, because today you take cash to go and give to a mobile money vendor and your agent, they put that in your wallet and then you start transacting. Now imagine it's in the rural area. Do you know what it takes for that agent in that rural area to be able to receive cash to hold when they have excess e-money? How long it takes them for them to get that rebalancing? How long they may have to travel to get that cash or swap cash for electronic money? Imagine that cash was electronic. The efficiency it introduces into the operations as an agent, the cost they have to reduce in their operation, the transport fees, closing the store down or their shop down, all these things. So mobile money actually has a lot to gain. And then some other benefits on the back end when it comes to the settlement aspects of the trust accounts and the rest, and how it further enables interoperability. I think when you look at all those things, it actually comes to enable and enhance rather than to compete. So those would be my thoughts on that particular concern.
Thank you very much, Kwame. Well, it's going to enhance and not compete. Oladipo, do you want to add anything from?
Yeah, I think that yes, from what Kwame said, I think it's only going to enable the payment space. It's not really designed to compete. Remember, before we started having internet banking and cards on the internet and using that for payments, all we were doing was cash, and the cash was there, was issued by the central bank, and we used cash to pay for goods. Now online payments have come. What we are simply doing is the same cash, but in a digital form that we're using for online payments. So it's only going to enhance it. It's only going to enable that payment process. What I think it's also going to do is that it's going to make sure that the finality of that payment is easier, is cheaper for the merchant, it's also cheaper for the person that is making the payment, and then it also makes it faster. So now probably if there's an e-commerce site that accepts CBDC, what you probably need to do is maybe just provide your CBDC ID or token, and then put the amount and authorize the transaction, and that's it. Today you have to first put your card, put your address, put everything, put CVV, and still and then the merchant will still get the money next day or T+2. With CBDC, definitely the merchant will get the money instantly. So that's really one of the things that will happen on the e-payment space or on the payment service provider space. So it's only to enable it. Thank you.
Thank you very much. I see it's going to make it efficient. It's going to enable it. But gentlemen, don't we think this is actually going to disrupt perhaps the whole idea around building agent network? Kwame, you would agree with me that extending financial services to the remotest parts of Ghana has largely been driven by most of the agents we've seen in the mobile money business. I mean, we've seen some banks in Ghana roll out agent networks. If I hear what you guys have said, looking at the efficiencies, looking at how we're going to leverage on instant payments to ensure settlement is done, we're going to ensure that people have digital currency when they want it, how they want it, and when to actually make a payment. Are we going to see the end of building agent networks in the medium to long term, perhaps, once everybody goes digital with the e-currency? Let's look at the context for Ghana first, and then Oladipo comes in to give me what he thinks about Nigeria. Go ahead, Kwame.
Okay, so I think when it comes to the agent network is a channel. It's a channel that has been well organized and primed to deliver several services. As it stands, the focus had been cash in, cash out. In fact, some agents were initially prioritizing, in the early days of mobile money, their priority would be customer acquisition. Then as time goes on, obviously, these customers begin to transact. So the agents also begin to focus a bit more on cash in, cash out. But the goal of mobile money itself today is to be able to allow customers to do more transactions on their wallet versus going to agents to do over the counter. So the Ghana story, for instance, had a heavy reliance on agents to send money. So agents, you'd go to an agent, give them money, they'll send money on your behalf. Then at some point, it transitioned from sending money on your behalf to putting the money in your wallet so that you send that money yourself. That didn't take away business from the agent. It meant the agent was no longer doing the remittance on your behalf, but they did a cash in for you. So again, their volumes grew. And I think when you look at the volumes that have grown today, there is no single agent who has any basis to complain. In fact, they may have done very well over the last few years, as long as they remained an agent since then. Similarly, these things will evolve. And I think if you look at the experiences in China and some other countries, the agent point is not just a point for cash in, cash out into perpetuity. It's a point that can enable financial service delivery. And financial service delivery in itself is evolving. So you see what's happening today in most countries. Government services can now be accessed at these kinds of points, right? Agency banking is also now taking hold. So banks can now let some of these agents who are of a higher KYC and they can meet certain due diligence, provide them with agency banking services. You can apply for loans and do several things from that point. Similarly, the agent's function will continue to evolve. It will not stay the same. And what I think CBDC does is it actually comes, as mentioned earlier, to reduce their operating costs and also reduce the barrier participation for the average agent, especially those in the rural area. These are concerns that are typically associated with developing markets. There are countries in some developed countries like the US and UK don't have some of these challenges. So obviously, when I hear issues around and questions around, are they going to do it? And we don't typically look at that too much because everyone has to make a decision for themselves as to what works in their markets. If you look at the retail payment space in the US, for instance, there are several African countries that are much more advanced from a real-time payment perspective than the US. But the US certainly is not because they cannot afford it. They are comfortable with what they have, but recently there's an effort to also update that a bit. So I think everyone has to look in their bucket and figure out how do you take these emerging innovation and solutions and solve your problems. And so everyone will decide. I think we all had assumed Britain would not step into this cryptocurrency, this central bank digital currency conversation, having been one of the first to actually explore it. And then suddenly they turned back with what is being dubbed a Bitcoin, and they set up a whole two different, one technical and one, I think, some kind of stakeholder forum that they've already begun engagement on. And this tells you at some points, everyone is going to make a certain decision. I mean, we had assumed the euro might be a bit lukewarm to it until Christine Lagarde also made certain comments. So I think we all have a certain responsibility to look at our domestic situation and determine how we address our problems.
Thank you very much. Oladipo, do you want to contribute to this?
Yes, I also see an evolution in the agent banking process. Today, in Nigeria, our agent banking is predominantly driven by cards and point-of-sale terminals that are being used for cash outs and cash-in services. And that also, for instance, introduces a cost into that process outside of what the agents will do to get the cash banked or also get cash from the bank to provide the agent banking system. I believe that once we have a CBDC and it's fully adopted, it's going to lower that cost for the agent. It's going to get more people into the agent banking space. And then it's also going to introduce new ideas or new innovations around agent banking, because banking services, like Kwame mentioned, is not limited to cash in and cash out. There's still other payments, and there's even the lending aspects that will come into play, which around micro lending, for instance. Today, we noticed that the blockchain gave birth to things like the Bitcoin and Ethereum and all that. Now it's giving birth to something called non-fungible tokens, NFTs. We don't know what's going to give birth to next. So that's exactly where we should be looking at this thing from, and it's going to evolve. People are going to start looking for new innovations around the CBDC, and it can come to the realms of even decentralized lending, for instance. It can come into the realms of even you can now probably buy as low, you can distribute assets as well. So it's going to get to that level, but we just have to look at the peculiar nature of your environment and what are the needs of that environment, and then look at how this will work for it. I've interacted with a lot of agent banking providers in Nigeria. They also share the same sentiment that this may disrupt, but I always try to tell them that, look, let's look at it from a different perspective, and see how this business can be evolved in such a way that it's profitable to everybody that is in that ecosystem. Thank you.
Okay. All right. I still see a few questions coming through, but gentlemen, I think this is where I have to ask a question that's dear to my heart and to most other people. From where we sit, I mean, there are vulnerable groups. We have to look at women, we have to look at the youth, SMEs. There are different segments in society that we have to be mindful about. We even have to look at the high illiteracy rates that we have in both countries. I mean, I know we've made progress in adult education, informal education. We've looked at reviewing the curriculum to ensure that, in fact, I'm happy when I see very old people actually take advantage and go back to school after they've had their kids. So people generally would like to take on new technologies and new innovation. My question is when it comes to financial literacy and financial education, I have seen several campaigns. I mean, having worked in tier one banks in Ghana, my work currently as a consultant in this space, working with international organizations. I think the key thing we've realized is financial literacy and financial education. I mean, we all woke up to the news about Ghana launching the pilot. Kwame, we've had our own discussions about that. In Nigeria, we saw what happened. I mean, you've rolled out, you've launched. What efforts are we putting in place to actually get everybody on board? Are citizens aware? Are we going to have a public campaign? I mean, I know in Ghana, we have the NCCE that actually handles some of these public campaigns to actually tell people about the good things that interventions like this will bring to their lives. In Nigeria, I know we have something similar. Kwame, what efforts are we making from where you said briefly to ensure that we bring everybody on board?
Okay, this is very important because, as mentioned earlier, consumer adoption is everything. The vote of confidence that everyone needs on their CBDC deployment is whether consumers adopt it. Now, consumers will only adopt it when they trust it, they understand it, and they can use it. It is not unusual for consumers to be wary of new technology or be somewhat uncomfortable with it until after a period. There's an adoption curve every time. So I think you'd see in most countries, there isn't a hard cutoff from physical notes and coins and only making CBDCs available. There's going to be some transition. Secondly, education is very important, as you've highlighted, and it is also a concerted effort. And I'll break it down this way. One, service providers play a key role in this because service providers, as it stands today, are the ones who have interacted with consumers and understand the user behavior, the consumer understanding behind why they do what they do and how they do it. And so that's very important. So consumer education involves all stakeholders, third parties, etc. Secondly, I think central banks typically in deploying anything always invest from a national level on embarking on consumer educational campaigns. And you will see this happen in every country that is doing CBDC, whether pilots or implementation. So that would be the case in Ghana as well. The other thing is there should be a specific focus when it comes to our senior citizens, those who have on the lower level on the literacy scale, rural dwellers, smallholder farmers. There should be a focus on them. And that's one of the things that we are doing. And women, by the way, and people with disabilities. So, other segments in our population that require a bit more support. I think what we are trying to do is to ensure that there will be sufficient education covering all these stakeholders. And one thing I would mention is, as it stands, Ghana doesn't have a very high literacy rate, but we're fortunate to have a high numeracy rate. What that means is I may not be able to read a full sentence at even a 6th grade level, but I can tell you exactly how much you owe me since 1992. And that's one of the advantages we have from our open markets, the market women and everyone, whether they're educated or not. They will tell you exactly how you owe them, how much you owe them, because they understand money. Fortunately, interacting with cash has given us the opportunity to be able to understand these dynamics. What that means is it allows people to count and be able to use mobile money. So even with mobile money, not every mobile money user today is actually literate, but they are numerate enough to use it. Now, we've been able to benefit as a society from that experience, and we need to be able to capitalize on that. Also, one other thing to consider is we often don't look at the gender issue sufficiently deep enough to be able to understand it. And so for us, one of the aspects and one of the focuses in our pilot, in fact, in our stakeholder advisory group, we purposefully have certain key resources to give us those insights. And we've been able to call out those aspects in our study, or how we intend to study it, to make sure that we're capturing the needs of women, because women have a peculiar need when it comes to the interaction with money and when it comes to the adoption of technology. It's a bit of a high barrier, but a more sustainable usage over the long term. And I think those in the private sector who provided services know this quite well. Having agents who are women brings in more brings in more women customers, women who are adopted to your service, women who you train well to adopt your services actually stay longer on your product, etc., or your service platform, etc. So we do recognize some of those insights. Our goal will be to make sure that we actually are looking at specific segments and the specific needs of women and factoring that into our pilots in order to have a broader sense of how best we can embark on an educational campaign that addresses everyone's concern. And of course, what is the incentive for commercial banks and the rest participating in something like this? Especially when there's a risk in a CBDC implementation that isn't carefully calibrated of them losing deposits. Why spend money when I'm already losing money? I think this is where, to ensure that the funds to a large extent sit in the commercial banking layer, most countries, you're going to see most countries put some limits on how much central bank digital currency you can actually take outside an account and put on an offline device or put on a hard wallet, for instance, so that it helps you control money laundering, it helps you control the risk of terrorism financing, but also helps control how much of the funds and deposits you're taking out of the banking system, the formal banking system, which is important. It goes to impact interest rates, etc. So we're very mindful of all these things, and every country is going to calibrate it. In Ghana, we already have a tiered KYC structure for mobile money. So again, when you look at what our experience and our journey has been, we have a lot we can tap into and learn from in building what our central bank digital currency experience can be. And every country will make that determination based on their experiences, the tools they have available to them. And again, it will always be a learning process that we do in concert with stakeholders. So that would be my response to that. I see Clara is off, so I'll turn it over to Deepo if there's anything you want to add.
Yeah, I know we are fast running out of time, and I can see Dr. William is in the room. So for me, I think to summarize, I think it's something that every stakeholder needs to do in terms of customer education, and that will also be driven by use cases. So there will be several use cases, maybe for the farmers, maybe for giving out grants to women and people in displaced places, even for COVID-19 palliatives and all those kind of things that the government wants to give to people. I think those use cases will also help to reinforce the education and the adoption and the message around the E-Naira. In Nigeria, for instance, taxes and some other levies will most likely be paid through the E-Naira once adoption becomes a thing. That also would reinforce that communication and that education. But every stakeholder involved will have to make sure that we communicate this solution to the market. Thank you.
Thank you very much, both of you. Thank you very much, Kwame and Mr. Alabede. I mean, it's amazing. I've learned so much. And one thing that struck me is that it has come to enable. And for some of us who are passionate about financial inclusion, we are hoping that it would help promote financial inclusion. For me, one thing that all this thing tells me is there's the death of the humble wallet. I can't remember the last time I used my wallet. And now that we are going for digital currencies and everything else, I think that accessory for men is dead already. So thank you once again for this wonderful discussion. We've been talking to Mr. Kwame Opong from the Bank of Ghana and Mr. Alabede from the Sterling Bank, Nigeria, and we've been talking about e-currencies. I'd encourage us to rewatch the video, learn about it, and let's make it a success. So thank you very much, and I encourage you to continue watching the other programs on during the Financial Inclusion Week 2021. Thank you.